because your technical chart does not represent fundamental analysis. So I prefer technical analysis on the day chart, and I do that to quickly discern where we are in trends, like where we are in the moving averages, where we are for support and resistance. Then I very quickly drop into the 4-hour to just see where we are in the cycles using oscillators, going from overbought to oversold. And then I confirm that support and resistance, maybe with down to a weekly or daily pivot point. Then I look at the 60-minute, the 50-minute, the 60-minute, the 15-minute, 5-minute for technical entries, using things like moving average, crossovers, oscillators, price action, so on and so forth. Done. If I'm looking at a weekly chart with weekly candles, or monthly chart, like you suggest, with monthly candles, and I'm looking at stuff that happened 6 years ago, I get the technical patterns. I get it, especially with simple ones like just simple support and resistance. But you're also looking at something 6 years ago. If you think about what was happening in the market 6 years ago, when the capitalism globally was crashing, to right now, where places like the United States are actually healthy and improving more, and central banks around the world have done or started to prop up their economy through extraordinary measures, well then everything on the left side of your chart, it doesn't reflect sentiment and fundamentals of what's happening right now. So generally speaking, I'll disagree with it. Okay? Monthly's just too big, doesn't reflect what's happening now. I love technical analysis. I use it all the time. I love price action. I use it all the time, but I also use fundamentals, and the fundamentals of what happened 6 years ago are irrelevant to what, because right now, somebody asked me, so why the British pound strong now if they haven't raised interest rates? Because the fundamentals have changed from horrible to possibly getting better, and a slight confirmation from the IMF that things are not as bad as what they seem, and that the future is not going to be worse, but probably better in the UK, which will lead to a positive change by Carney at the Central Bank of England to change his policy to more normalization, which would then increase interest rates, which then would appreciate the value of the pound. Therefore, boom, the pound is increasing based on future assumption of policy, based on fundamentals. Okay? So that's that. Now, the fundamentals can change, like with an election and stuff like that. But in my experience, the elections in any country don't dramatically change things because, yes, they're risk events, but fundamentally speaking, it's rare that it changes things. I mean, you'll get fiscal changes, but governments are so lame now that they rarely impact anything on a global scale. The central bank, yes. The prime minister or the president or the grand poobah, usually not. So anyways, we got to get going. My name is Wayne McDonell. I'm a Chief FX Market Strategist for TradersWay.com. Thank you for being a client. Here we trade Forex, energies, metals, indices, and binary options. I'll try to cover a little bit of everything today. Feel free to put in requests. As you see in this chart here, yesterday's request at the end of our session was this. This was our trade plan, and we were here at the bottom. Now we're at the top. Nice request. If you got some more, we'll set them up for you. You're the boss. I am your humble servant. Now, let me remind you that trading with leverage is risky, not appropriate for everyone. Your past performance, good or bad, does not predict future results. But always stay small, stay humble. Stuttering today. Focus on the long term and never risk money you cannot afford to lose, eh? You want to do kitty cat? Yeah, we did that one yesterday too, right? But we'll just briefly look at this one. There was the plan. Here's the big rally. This was a plan that we had 2 months ago based on the week that the IMF report would come out and plausibly back up Carney's point of view for the state of the UK economy moving forward, not past. And apparently the market interpreted the IMF report just the way that we guessed. And the market did reverse. The market did go up. And then we ended the week here using many things like Fibonacci theory and pivot point theory. Price is supposed to come down, find support, and then move up. Well, it came down to the cluster of the 3A2 Fibonacci extension, which is bullish, and the weekly central pivot point, which fits pivot point theory, and then should go up. And as of that was our trade plan 24 hours ago when we were down in the first gray zone, and now we're up here. So that's long-term fundamentals based on what the president of the central bank has said, backed up and confirmed by a second party, and that was the IMF, backed up by price action, pivot points, and Fibonacci for yesterday's trade. And that one's a nice one. I like that one. That was nice for a lot of reasons. How many people are making money today on the British pound? How many people have stories specifically with British pound? Wyatt, Dimitar, YJ, Buzz, Oren, Daniel, yeah? Mike, dope! Might have been yeah, Mike, we're probably going to have to change your, move you to the next step soon, huh? Looking forward to hearing some good things about patience and discipline. Brianna, right on. Alan, 15 pips scalp. Well, that's a break even, right, Alan? John Kelly says, last week and this week, very good. Yep. Oh, good. Right on. So that's good. We'll put that in the books and just look. You might remember it from this ugly chart, but it was back to the apex of the triangle and up. That's a pretty ugly. But you recall last week's trade when we were guessing around the IMF week, we also had the inverse head and shoulders. I know it's really difficult to see here, but we did talk about it back then, and it did. You got the inverse head and shoulders, and it produced pips perfectly to get us to where we were. Then we had our perfect little retracement back into the apex, back into the 3A, back into the weekly central, long and gone again. Nice. Blah, 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 blah. So that needs to play out. It's not done, but the vast majority of those pips have been produced. The rest is history. This isn't the kitty cat that I wanted to show, so it must be over here. Oren's got 170. Right on. It's good, Oren. This is our trade plan from yesterday. Does anybody remember this one? Okay. As you can see, we've been tracking this trade for a long time. Each of these tiny candles is 4 hours. So we've been tracking this since the beginning of the year. This is the breakout. So therefore, the way to trade a breakout is catch a retracement back at the roll reversal based on price action. Kevin says Canada seems to be helped out by stronger oil prices. Yeah, sure. Yep. You bet. The other thing that's supportive for Canada is that their largest trading partner, the United States of America, is in reasonable good health. And with a weak Canadian dollar, anything that Canada produces They used to produce something called the Chrysler K car. Yeah. That anything Canada produces is that much cheaper and therefore more attractive to Americans that love cheap, 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 cheap garbage. Bart Simpson t-shirts, disposable beach chairs. Cheaper the better. Yeah, $40 TVs. Yeah. Cheaper the better. So anyways, Canadian products are that much more affordable to the United States. So that's going to be for the Canadian economy. I mean, you don't want a super weak Canadian dollar, but the fact that its largest trading partner is doing good, especially relative to the rest of the world, and your products are actually more competitive than than others, than other nations' products. Right on, man. That's good for Canada. So it's not too bad. Yeah, the K car was, I don't know, the 1980s. I'd like to think it was the ugliest car ever produced, but it's just not true because cars were even worse than that. And the K car was probably pretty good because of the Canadians have put it together with love and pride. So, anyways, this technical setup is still kind of putting itself together. Okay, but everybody understand the logic? Breakout, pull back to the roll reversal, drop it like it's hot. Now it could still go up a little bit more, pretty close. I think this technically. Let's see. I can adjust it just ever slightly, and this there was sort of a ghost doji in here where it goes. Boop, 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 boop. I mean, we might have hit it, but it may not have. Okay, but you could find yourself down here 3 days from now and find out that that was the touch. So you got some decision making to do, but nonetheless, whatever your decision is, okay, whatever your decisions, I want you to make sure. I want to make sure that you understand the logic, right? Yeah, I'd say if you get past the sucker here, I pity the fool. Um, let's see. A break below that would probably confirm. Doesn't mean you can't get a big pullback, but you know, we're pretty close to a confirmation there. That's pretty, isn't it? I mean, when you look at this chart, does that look like intelligent technical analysis? It's not too confusing. There isn't 900 lines going on. Right? Do you guys like that chart? I look at this chart and it makes me feel good. I'm getting verklipped. It's Birdie. I like the way you trade. Mm-hmm. What do you think, R2? All right, so let's go through the commodities. Then we'll go back. And nothing really going on here again. So if you were going to be a trader of gold, and I say trader because I don't think it's worth buying or selling, so you might as well just trade it, then a trader needs to sell it high or buy it low. So we're there, right? Look at this, 1,200. Nobody knows what to do. I wouldn't risk any money on that. Okay. And is it paying you interest if you were holding it on a sideways market? No. See, a sideways market could be a really nice market if you're in a carry trade. The sideways market is perfect for carry traders. Because you don't want to earn too many pips, because then the pips greatly outweigh the amount of interest you're earning. And then all of a sudden you start sweating bullets and you talk yourself out of good long-term trades. A sideways moving market, let's say, so this is gold, but let's say you were down here and you bought in this left green zone here around, 1180. And imagine every single day you're earning interest on a carry trade like that, and it's more up than down, which keeps you safe. But it's not, up 900 pips, and you're like, well, I have to get out of this now because it's got 900 pips, and that's so much money, and it's so much more than interest. I mean, that's like a year's worth of interest payments. So you get out of a good long-term trade that you could be in for 5 years, but you got to take the pips. So a sideways, moving market, and one that's slowly moving up, is perfect for carry trading. It doesn't even give you interest. It's just a waste of your money. I'd rather keep my powder dry. Double the powder, shorten the fuse. So we're just kind of in here, as you can see, and again, this is predictions several days in advance, but we've rallied up here from the 50%, which predicts somewhere between the 382 and 618. In this case, it went up to the 618. Then we assumed it would come down to a roll reversal area with this gray zone, and then turn around with the Stokes. Remember, this Stokes was diverging at that time. Should turn around once it hits the 55 and converge with the price action area to move north, suggesting that maybe tomorrow. Maybe. Now, we have oil inventories today, right? The DOE at 10:30. Maybe today. But, sometime reasonably soon, in the next 48 hours, oil has the potential to go a little bit higher. Maybe closer to 60. I have it marked here as 64, 65, and I have a plan in place already. What do you think? Does it help to have a plan ahead of time? What do you think I'm going to do up here? Hesitate and double guess myself? Oh, I don't know. Well, maybe not. Now, the interesting thing is that plan wasn't several weeks ago. That plan was several months ago. We were talking about that in December. We were talking about it retracing to 65 in December. It's almost May. Cool. Right on. Well, we're ready. If it chooses to go that way, we're ready. Bring it on, baby. Fire for effect. Okay. We're not danger close yet, but it's looking nice. How about their stock market? Well, like I said yesterday, I don't really have highs to predict. I just know where my lows are going to be. Definitely could use a breather, maybe, right? Now, I'll be honest with y'all, all y'all. I haven't been watching earnings. Just I've had family over to the house, and then once they left, and I had more family to the house. So I've been having big dinners and busyness and all the other stuff that I'm doing. Just haven't had the time to do the research. So I'm looking at it, and it just seems like ho-hum, okay, not good, not bad earnings. So I'll have to do some research. But I had a board meeting last night and I have a board meeting tomorrow. Busy guy. So I don't know, maybe on the weekend, instead of playing with my children, I'll research earnings reports. But the way that the market is responding is like not bad, but not good. Seems pretty sideways. I think Coca-Cola and McDonald's report today, right? That's like the American dream right there. We should have Disney report too, huh? Anybody looking forward to the new Star Wars movie that Disney produced? Ooh, yeah. Looks epic. All right. So anyways, stock market kind of flat. There's not a lot of news on the calendar for the, so, maybe just everybody needs a break. Everyone's overworked. My father had them. My sister had them. I had them. And you have them too. All right, so what do we got here? DAX, and so what you're hearing is the DAX falling, the DAX is falling, the DAX is falling, the DAX is falling. Yeah, yo, the DAX is falling. You're right. So remember, we discussed this in detail. I think it was last week. The idiots get in late. And when the smart money that got in earlier on time have made so much money that they just need to take some profit, and 80% of the market's in the trade up here, way late, of course, then the smart money starts wipes out everybody with that has stop losses, and it starts to come down. Yeah, well, 20% of the market's loving it, 80%'s hating it. And so I'd like to be part of the 20%, like, okay, I get it. And I would buy it here, and I would buy it here. First one is just simple price action. And again, this is all last week's plan, so you should already be in down here. And therefore, this could just be a triple bottoming or a 1, 2, 3 reversal. Okay. According to the oscillator, this could be an all right time to start, and you get a 1, 2, 3 like this. That would be most ideal. But if that collapses, then I'd think again around the 3A2, and if that fails, then I would buy it again around the 618. So I already have plans. DAX is coming down. Good. Now, why am I confident? Because fundamentally, this should not come down. The ECB is still going to pump money in. So again, I think it's just the idiots that are in so unbelievably late because they have no plan, putting no thought. It's dumb money trailing smart money that was in 6 months ago, 5 months ago. Okay, this here was people anticipating a change at the ECB. And if you remember, the ECB was so slow that it was supposed to happen in March, but it happened later, right? But whatever, they're really late. They're a meeting or two late. But anyways, eventually, right around here, I think it was here, we finally got the ECB to. Oh my God, look, the DAX is bullish. Well, that's just so slow. It's just ridiculous. So now these guys are getting wiped out because the smart money needs to take some profit and all that kind of stuff going into summer. But I would buy it here, and I would buy it here. And that's how the market works, actually. No, not also, Kevin. It's the only reason you see this here. It's the only reason you see this here. It was the anticipation of the obvious, because as soon as they started, Draghi started doing things like asking the courts to give him authority. I mean, it took a while to put this together. They should have bought you a house, right? So anyways, then finally you got the authority, and then finally confirmed it, and then now we're up here. Now people are buying it. Well, of course, if you think about it, when you buy a new position, your stop is fairly close, right? 50 pips, 100 pips, whatever it is. but it's not 500, it's not 800 pips away, right? So these guys are just getting wiped out on price action because they're late. They're slow as molasses on a cold Georgia morning. Why would you buy it when it's unbelievably overbought now? So smart money was just out there taking profit. All these guys up here that bought late, they're losing money. They're going to lose or break even or whatever with their rabbits, right? It'll come down and you'll hear on TV, oh, yeah, it's falling, it's falling, it's falling. Great. You know, people will buy it as long as there's quantitative easing, right? Professionals are going to consider buying it again. So I only see three areas that I'm interested in. Price action buy, 3A2, 618. Okay. You can back this out a little farther and see that, you know, we have support way down here. That's a 786. I just don't think we're going to make a 786. That's it. So that was the plan yesterday or a Monday or whatever it was, and we thought that was interesting. It must have been last week that we drew this. It must have been last week, guys, because I wouldn't have drawn this after this gap. So this was even sometime last week. But nonetheless, whatever. I still think if you're playing that pattern of buying at the double bottom, then the next pattern is the 1, 2, 3 reversal. And that could be happening here. Plan B for this one, and it could happen. Obviously, I don't know which one, so that's why you got to watch the trade. Plan B is this one. Okay. If plan A or B fail, then I'm just going to simply let it fall and look for reversal patterns here. I would play a double bottom. That's a pattern. I would play the 1, 2, 3 after a double bottom. That's a pattern. Okay. Yeah, it does, Wyatt. Here's what you do, Wyatt. Wyatt says, I have no DAX. Yeah, you do. Go here and select show all. Really? I have a special account? I didn't ask for a special account. There's no way. Maybe they save it for, you know, really good looking people. You know, the extra humble ones. Yeah. You know, I don't think I have anything special. Yeah, Dar's like, yeah, then I have that. You know, honestly, I don't think I have anything special. I certainly didn't ask for anything special. This is just a regular old account. Okay, so there's the commodities. All right, so like a lot of things are just kind of S&P kind of flat, oil kind of still bullish for now, gold flat, but DAX maybe has some potential up, which is fine. Look, how about this? If you can't make money in gold, put it in oil. If you can't make money in the S&P 500, put it in the DAX. How about the Nikkei? The Nikkei, let's do a boop. The Nikkei just made a higher high. You see this high to the right? When was the last time the Nikkei was at that price? Hang on. Sorry. I don't know why it's... There we go. When was the last time we were at this price? 15 years ago. 15 years ago, dude. What do you think? Do you think central bank and government stimulus had anything to do with that? Then why aren't you in the DAX? These things rally because of free money, guys. That's the whole point. Okay, you know, asset appreciation. Let's take a look at our euro. Not sure where we left this one yesterday. We might have been on a different version of the chart. Oh yeah, yeah, I could see this. This looks like bad news bears. Kind of looks like a wedgie to me. What do you guys think? Which means you might just want to walk away until it breaks. See, what I'm seeing here is a lower high and a higher low. What's the trend? What trend do you have when it makes a lower high and a higher low? Yeah, so you can play it all kinds of ways. I'm sure there's all kinds of strategies in this situation. I'll tell you what mine is. If it breaks out before the before the apex, which is here, it tends to be a fake out. Okay. If you get close to the apex, we're pretty close actually, then it's much more trustable. So if we get a breakout like this, then it's probably going to be followed by something like this. You know what? It probably wouldn't break out even that far. So let me adjust this to something that is probably more realistic. There we go. Okay. Or the opposite. And the truth, of course, is I don't know which one it's going to be. Nor do I really care. Because I'll just let the market fight that one. And then I'll go with the market like a cork in the river of Forex. I'm not going to swim upstream if I can avoid it. Okay? So as soon as I get that, I go like shields up. Right? That's all. So there's no trade there, but is that helpful? Okay. I'll give you another way of looking at it just in case it doesn't fit your liking. If you're a hardcore bear, which many could be on this, you sell at psychological levels and reversal pivots. Well, the reversal pivots are way up high. Right? So you just sell at the psych levels. Where's the psych level? Oh, here it is. That's it. Done. You're done. You sold at 108. What else is there? Does it need to be more complicated than that? Right? Does it really need to be more complicated than that? No. Izzy got it. Right on, Izzy. Yeah, I mean, stuff like that, it's so easy. Now, I use that word carefully because we know it's not easy, and I'm not trying to say it's easy. But it's so easy if you have it planned out in advance. And all you have to do is say, if it starts to reverse or wimp out near 108, I'm going to sell it. And your definition of that could be anything. Bearish engulfing candle with a retraced 5-8 cross. I don't know. Throw down a binary option. I mean, something, right? I mean, something. That is easy if you thought about it ahead of time. And if you haven't thought about it, like reacting to it, then you're like, oh, well, I don't know. I mean, it moved off there, but now I'm too low. Oh, and we have the moving average, and we have this thing, and oh, I'm really not sure. Dude, are you a bull or a bear? If you're a bear, sell it at resistance. What's the problem? Problem is you're not a bull or a bear. You're a pig, and pigs get slaughtered. Another way of saying it is you stand for something or you'll fall for anything. Well, in this case, if you stand for resistance, I resist. Power to the people, say, make a miracle, right? Sell at resistance. That's your job. If you're a bull, yeah, you start buying now off this role reversal. But just, and this is why, like working with Mike, we're flipping a coin so he can practice being disciplined. That's all I care about. I don't care about right or wrong. I care about discipline. If you're a bear, that's resistance, and you're prepared to sell, and you're setting up ambushes all around 108. And if price comes in there, you're going to fire for effect, and bulls will get slaughtered with the pigs. Right? But if Mike said, if his flip of the coin was buy US dollars, and he's trading the Euro USD, 108, and that's resistance. It's a daily or one psychological level. What more do you want? Yeah, well, I didn't ask you to make decisions. Now, if you struggled in the exercise, Mike, then we need to focus on you identifying support and resistance. I mean, if you can't tell that a psychological level like 108 might be resistance, see, we don't know, do we? We think it could be. This is why you drop into a smaller time frame when you get there. And you use technical analysis now to put you into a trade properly. And this comes down to whatever floats your boat as far as technical analysis. I'm not going to say my way is the only way. But, you know, what I teach in my book is if you run into resistance and you're a bear and it's 90% overbought, you get a 5A cross, you sell. Done. Next. Right? And it doesn't have to be the world's greatest trade. But at least you're at resistance. You're overbought at resistance in what you perceive to be a downtrend. Sell it. Sometimes you'll be wrong, but I think more often than not, you're going to be happy with your results because you're trading the direction of the market, and the market wants it to fall, and you're selling at resistance when price is overbought. How could it possibly go any higher if the market is bearish? That's what you're trying to do, is find scenarios where a currency pair is mispriced based on the long term. If it goes higher, you lose a little bit of money. But think of it almost as odds or probabilities, right? The way to beat the casino, and you need certain games to do it where the odds are in your favor, one of them is like blackjack, right? And the laws of probability can help you beat the house. Right? You know exactly when to double down. A lot of the time you lose, but you know, the probabilities suggest in certain situation you're much more likely to win. Okay? So on and so forth. I don't know. I'm not a gambler. When I go to Vegas, I walk around, I'm like, this is silly. I'm a currency trader. I don't gamble. Gambling's boring. I'm excited about, you know, probabilities in my favor, where I'm very likely to make money. It's probably the best feeling there is. right? Most people don't get that if they have a middle management job in marketing communications at some cube farm, right? They don't have that, let's put this project together and have the same feeling that we get. What does it feel like to be in a trade that you sent, let's say that you planned out yesterday and you took today and it's working out very well and you'll think you'll be in it tomorrow? How does that feel when you get the first 25 or 30 pips and you jam your stop or something, and all of a sudden you're up 50, 60, 70 pips? I mean, it's just like, oh my God, yes! And then you go find another one, boom, right? It's a beautiful thing. But I don't get that feeling when I'm gambling. I go to Vegas and I wouldn't feel in control. I wouldn't feel like I earned it. It just doesn't feel good. I mean, to me, it's boring. My gosh, right? Right? Hey, Johnny, this is our office, man. Let's keep it pro. But yeah, so I think doing the hard work and seeing the fruits of your labor is the most beautiful thing about our industry, because it's an honest industry, it's an efficient industry. Just think about it. Your old boss was the most inefficient part of your job, right? He kept screwing things up for you. So anyways, and then it's instant gratification when you're right, and you know it because it's happening in front of you without prejudice. It's beautiful. This is a great gig, guys. You need to fight for it. If you want to be a currency trader, you need to fight for it. A lot of people fail. On the retail side, lots of traders fail. We all know that. But what's left over for the ones that are willing to work hard for it, it's almost too rewarding. Now, does it give you health care? No. Retirement benefits? No. Does it give you sick days? No. Does it pay for your vacations? No. So you better earn some money. Okay? You see what I mean? You better earn some money. But if you put it all together, oh, it pays for that stuff. Right? Think about it. Your friend's like, oh, I'm going to Walt Disney for 4 days on my vacation time. Yeah, all right, so they get $600. Whatever. Half a trade, right? Earn it. Let them live their quiet lives of desperation. They produce $2 million worth of value for their company, and their company pays them $90,000 for a compensation. And to keep the miserable happy just a little bit longer, give them some paid vacation time. Take them out to, Applebee's for lunch. You're a valued employee here. let's get some potato skins in for the sucker at the table, the one that produces $2 million worth of value and accepts $90,000 as a paycheck. So, anyways, whatever. As you can see, I've never been much of an employee. All right, here we go. Yeah. Yeah, well, Brett, we can only laugh about it. I've had jobs, not many, but I've had jobs, and there's things like I have had a cube in a farm, and there's always some idiot burns a bag of popcorn in the break room and stinks up the whole floor of your building. You're like, really? Now I have to work in this stench? You it's just like, I remember having meetings about having less meetings. I mean, it's a joke. It's like a cartoon, but these things, people live that way. Oh my gosh. I don't know how people do it. Drive for 2 hours to go to work each day? Really? You spend 10 hours a week commuting? You spend 40 hours a week a month? Or sorry, 40 hours a month commuting? That's a whole work week. How much do you get paid for that? And your gas and your car insurance and your car payment and the reasonable probability that someone could smash into your car and break your back, kill you, maim you, lose a leg, all because so you can go to your stupid job. My gosh, so let's go back to what I was thinking. What we have, guys, is amazing. Being currency traders where you can work in your home, set your hours, be the master of your domain. Like, if you don't fight for this, what else do you have that's better? Get in the game. Double and triple your effort. Work all day, work all night. Read 1,000 books. Keep trade journals. I used to get something like 14 magazine subscriptions. I would subscribe to trade magazines for oil exploration and oil drilling companies. I kind of had to lie in the application and say I was the CEO of Wayne McDonell Exploration, but I was exploring macroeconomics and commodities. I didn't know what was important, but I knew that somehow oil was relevant in currencies. That time I just didn't know, so I subscribed to everything. Supply chain management in trade industry magazines. I had newspapers flown in from Japan. I had newspapers flown in from the UK. I read everything. I watched everything. I did everything. I mean, I took it extreme. I was 145,000% in, and nothing was going to stop me. Nothing. Nothing. Not even my own inadequacies. I would find it out. I will work harder than anyone to achieve my success. And that's how I took it. That's it. I simply have to out-hustle 95% of the people in the market, and I know I can do that. 95% fail? Good. Bring it on, brother. Because I don't want to be in the top 5%. I want to be in the top 1%. And I know I can work for it. So get in the game, man. It's right. Time to take it serious. It's worth it. You're worth it. But you got to earn it. If you don't earn it, I'll tell you what, because over 10 or something years doing this, met lots and lots of traders that have come and gone. And I'll tell you what, even if you come through and you're successful for a while, but you're not really earning it, you're not keeping a trade journal, you're not identifying your strengths and weaknesses, you're not focusing on improving and stuff. What happens is you get on this lucky streak for a while, and let's say like you're just selling Euro USD. Well, look, any idiot could have been selling Euro USD over the last 6 months, right? And just, let's say, have no idea why they're doing it. It's just falling, and they just sell. All of a sudden, they're the world's greatest trader, selling in a falling market. In fact, selling in a crashing market. And somehow now they're the world's greatest trader, right? And a couple of things happen. One, the market changes. They don't, and they lose all the money. Or the second one is, for a lot of people, self-sabotage kicks in. Because they're laying there in bed at night going, man, this has been a great trip. I've made all this money. Forex is fabulous, but I don't know why I'm so successful. And it's luck. It's just got to be luck. And my luck is going to run out. I mean, when does my lucky streak end? I mean, and all of a sudden you self-sabotage and you find a way to lose. Does anyone believe that? That for a lot of people, even the ones that have started out successfully, that somehow psychologically way in the back of their stem cell, their they find a way to lose. Okay? So therefore, you need to honestly believe you deserve the success. And the way to do that is by earning it, by doing the blood, sweat, and tears for years. There's no way around it. I honestly don't think there's a way around that. So that when things inevitably get tough, because everyone goes through challenging periods in their trading, you believe in yourself and you know how to get back. Do you know how to get back to success? By earning it. But if you got lucky in the first place, you're never going to believe you can get back. You're like, oh, that's it, it's over. And then you're right, it is. But if you know how to get back, so like, I remember I went through a tough period. Oh, I don't know now. It's probably been about 6 years or something. But I was trading with a group, and I told people, I'm like, I just made some horrible trading mistakes, things that I know not to do, and I did them anyways, and I don't know why, and I don't know how, but I'm in this situation, and I've lost confidence because I can't believe the mistakes I've made, compounded on other ones so fast. I mean, but anyways, I was very open and honest with everyone, which I think is probably part of it. But then I said, I know how to, all I want to do now is regain my confidence. And that's what I told everybody. There was probably a group of about 80 people. And I said, what I'm going to do for the next 30 days is nothing but 25 OCOs. That's where you put in your trade, and it automatically has a 25 pip stop and a 25 pip limit. And if one is hit, the other is canceled. OCO, one cancels other. So I'll either 25 pips or I'll make 25 pips. That's it. There's no in between, right? And for one entire month, I must have made 5 to 10 trades a day, not trying to make pips, but trying to focus on patience and discipline, buying at support, selling at resistance, and proving, at the time I called them putting. And actually, to go even farther back, the idea was I was reading about Phil Mickelson, how he 100 putts in a row on his practicing green. And if he missed the 88th putt, he'd have to start over again at 0. He had to make 100 like 3 or 4 like 4-foot putts. The scary one, right? That you have to make in front of everyone for $1 million to win the tournament and you miss it. The scary one, right? So he would do 100 in a row, and if he missed the 99th one, he would have to take a break and start again. So I got that idea too, where I should be able to just putt. And so I did that for a month until I confirmed to myself that by doing the hard work and staying unbelievably focused, not worrying about the big money and all that kind of stuff, not over leveraging, not trying to hit home runs, just make 100 good trades. And I did that, and I did that, and I did that, and I did that, and over 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 again. Well, I regained my confidence because I regained the control, right? And I talk about this. You can't have confidence without control, and you cannot have control without consistency. So that's what I focused on. And at the end of it, I was supremely confident in my abilities again. And that's the only way to get back. It's through earning it. But if you didn't earn it in the first place, you'll find a way to self-sabotage, and it's all over. So you need to earn it so you can sleep at night. Okay? But I'm telling you guys, it's hard work, but it's worth it. It's honestly worth it. Try harder. I don't care if it takes you 5 years. I traded on a demo account for 2 years, focused on improving my skills, not making pips, improving my skills. Identifying strengths and weaknesses and attacking the weaknesses and turning them into strengths. It sounds cliche, but that's what I did. Business plans, perform cash flow statements. I had a mission statement, an operational statement, key result areas. I was a venture capitalist, Dar. So anyway, so I'm used to business plans and stuff. So I treated it like a business from day one, all in, extremely focused, ruthlessly focused. What does I watched a video on YouTube about Will Smith, and he says, ridiculous, sickening worth ethic. That's what his secret to success is: ridiculous, sickening work ethic. And if you bring that, you'll earn it. And if you earn it, it pays too much. Because the other 95% don't bring it. They don't earn it. They're waiting for the free money. They're waiting for the easy money. They're trying to get rich quick. And if Forex fails for them, they'll just go take an options course, and they'll go try options for a while. If that doesn't work, then they'll buy house flipping real estate things, and if that doesn't work, they'll buy Amway, and if that doesn't work, they'll get into renting Coca-Cola machines, and if that doesn't work, I mean, they're just waiting for the easy money, man. There's nothing better. I have reviewed well over 1,000 business plans. I've invested into over 100 patents. So how many patents have I read? I mean, maybe another 1,000, right? 1,000 business plans, 1,000 patents, and there's nothing even remotely close to the quality of business that Forex offers. No cash receivables, right? You just get paid immediately. It's right there in your account. What's the cost of borrowing, right? It's almost nothing, especially if you day trade. You can borrow money for free and then pay it back to the bank before the end of the day. That's kind of what we do during day trading, right? Because you're not paying interest on your leverage if you're only in the trade for a few hours. So the costs of borrowing is free for your leverage and so on and so forth. You're in control of your hours. If you incorporate, especially in the United States, the tax write-offs are fantastic. I mean, it's a great business. But you got to be 145,000% in, man. Mentally, spiritually, physically. Okay? I actually traded so much in the beginning, and you'll think this is funny, and I'm not joking. I wore the skin off the tailbone on my butt. It actually happened. I wore the skin off my tailbone. And for about a week, I had to like get one of those Japanese chairs where you kind of have to kneel on it so there's no weight on no, I'm not joking. So all you have to do, guys, is work harder than me. Because I represent the market. Maybe, just maybe I represent the smart money. I don't know about that. But I try hard. And so if all you have to trade, like it's a zero-sum game, right? You're either right or you're wrong. If you're long, there's someone short on your position, right? It's zero-sum. So just imagine I'm the other person on the other side of your trade. All you have to do is have worked harder, planned it out better, executed it flawlessly, and that's it. You should be fine. So you need to hustle. And join me on this journey. I'm only in year 10 or 12 or whatever it is, and I'm still trying. Anybody with me? My band of brothers and sisters? It's a hard gig, man. But like I said, if you never, ever, ever, ever let your guard down, it pays too much. All you need is to know everything in the world and accurately predict the future every single day. Pfft, how hard could that be? So I've taken up a lot of time. I apologize for that, but I think we got through a lot of technical analysis. So peace on earth. May the pips be with you. May your profits be above average. Thank you for being on my team. Thank you for being a client of TradersWay. And again, if you're watching the recording, if you're on YouTube or something like that, give it a thumbs up. Share it with your friends on Facebook. Leave a comment. Yourself. I'll see you tomorrow and the next day 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 and the next day. You're not alone, man. Cheers.